For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. When most people think about artificial intelligence stocks, the first names that usually come to mind are Nvidia and Palantir Technologies. Nvidia is the clear leader in terms of overall size, since its market capitalization has already grown to more than $4 trillion, making it the single largest company connected to artificial intelligence. Palantir, on the other hand, has delivered the strongest performance this year, with its stock price climbing by more than 100%. However, just because Nvidia is the biggest and Palantir has been the best performing, does not mean that analysts on Wall Street consider them their top choices among large artificial intelligence companies. The truth is that neither Nvidia nor Palantir is currently at the very top of the list when it comes to where analysts see the most potential gains for investors. To better understand which company stands out, it is helpful to look at the two main ways analysts evaluate their optimism. The first measure involves looking at how many ratings are labeled as buy or strong buy. If most analysts feel confident enough to give those recommendations, that signals a positive outlook. The second measure is the average 12-month price forecast. If that average target suggests strong upside potential compared to where the stock trades today, then analysts are showing their bullishness. In Palantir's case, the numbers are not very impressive. Out of 25 analysts surveyed by S&P Global in September, only 4 gave Palantir a buy rating or better. To make matters worse, the average 12-month forecast is actually slightly lower than its current stock price, which suggests limited near-term upside in the eyes of Wall Street. Nvidia receives a much better response. Out of 65 analysts following the company, 58 labeled it as a buy or strong buy. That is a very high percentage of positive ratings, which shows how much confidence analysts have in Nvidia's future growth. Furthermore, the average 12-month forecast for Nvidia is about 23% higher than its current share price, which means analysts expect strong gains to continue. Even though Nvidia performs well in both areas, it still does not take the top spot as the large artificial intelligence stock that analysts are most enthusiastic about. To pinpoint that top choice, analysts created strict filters. They excluded companies where fewer than 75% of the analysts gave buy or better ratings, and they also removed any stocks that did not have at least 20 analysts covering them. After narrowing the field, a few strong contenders emerged, including Adobe, CoreWeave, and HubSpot. All three of these companies have strong reputations in the technology space and are increasingly involved in artificial intelligence. Yet when the final comparison was made, the company that came out on top was Atlassian. Atlassian is perhaps not the first company most investors would expect to see in this discussion, but it currently has the strongest backing from Wall Street. Out of 31 analysts, 25 gave it a buy or strong buy rating, which equals 80% of all ratings. That is a very high level of agreement among analysts. Even more importantly, not a single analyst recommended selling the stock. On top of that, the average 12-month price target for Atlassian suggests upside potential of roughly 51% compared to the current share price. Analysts clearly believe the company's recent sell-off was far too severe. At present, Atlassian stock is trading about 47% below the high it reached during the first quarter of 2025. Despite that decline, analysts remain overwhelmingly positive about its future growth. A major reason for this optimism is the role that artificial intelligence is expected to play in Atlassian's long-term expansion. Chief Executive Officer and co-founder Mike Cannon-Brookes made it clear during the company's fiscal 2025 Quarter 4 update in August that artificial intelligence is fundamentally changing the way people work. He also stated that this shift is creating powerful tailwinds that will benefit Atlassian. The financial results from Quarter 4 demonstrate this momentum. Revenue rose 22% year over year, reaching $1,380 million. Adjusted earnings climbed 51%, reaching $259.1 million. The driving force behind this growth was Atlassian's cloud business, which has become the central part of its strategy. Analysts from Raymond James highlighted this by pointing out that the company's cloud value offering has recently tripled, reinforcing their belief that this segment will continue to be a strong growth engine. Atlassian is also working to expand its influence in artificial intelligence through acquisitions. The company recently announced its plan to purchase The Browser Company. The goal of this deal is to develop a browser powered by artificial intelligence that is designed to run software as a service applications more efficiently. Some analysts view this as a strategic step that will allow Atlassian to further integrate artificial intelligence into its ecosystem. While it is uncertain whether Atlassian's stock will rise by 51% in the next 12 months and fully reach the analyst forecast, the overwhelmingly positive sentiment among Wall Street professionals suggests that investors should pay close attention. In terms of its overall market, Atlassian sees enormous opportunities. Management estimates that the company has a total addressable market worth $67 $14 billion. Within its current customer base alone, it believes there is a revenue potential of $14 billion without even needing to raise prices. These figures highlight the scale of opportunity that lies ahead. With strong demand, powerful artificial intelligence trends, and an expanding product offering, Atlassian is positioned well for growth in the years to come. The main downside for investors to consider is valuation. Even after the recent drop in share price, Atlassian stock is not considered cheap. Its forward price-to-earnings ratio is 38.8, which places it at a premium compared to many other technology companies. Paying a premium valuation means that investors are betting on significant future growth to justify the current price. However, the fact that such a large majority of analysts remain bullish despite this valuation challenge suggests that many believe Atlassian has the ability to deliver. Although Nvidia is the largest artificial intelligence stock with a market value above $4 trillion, and Palantir has been the best performer this year with gains of more than 100%, Wall Street analysts are most bullish about Atlassian. Out of 31 analysts surveyed, 80% rated Atlassian as a buy or strong buy, with none recommending a sell, and the average 12-month price forecast suggests potential upside of about 51%. Analysts believe the recent sell-off, which left the stock nearly 47% below its peak, was excessive, and they remain confident in the company's growth prospects, particularly as artificial intelligence drives its cloud business and as it expands through moves such as its planned acquisition of the browser company. Despite its premium valuation, with a forward price-to-earnings ratio of 38.8, Atlassian is seen as well-positioned with a $67 billion total addressable market and strong long-term opportunities. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.